Hey guys, TommyBryson here, and 2021 is not yet over, but we're almost halfway there. And the crazy thing is basically that time passes very quickly. So it's basically been like over a year since the pandemic, since 2 stimulus checks, since the Federal Reserve pumped money into the economy, since interest rate has been historically low. The point is, a lot has happened. And whenever this happens, what happens is people have more money in their pocket. They go out there, spend more money, the market goes up, business does more well. And by the way, now unemployment is slowing down and all those things. However, though, 2021, is the market going to crash? Are we going to have a sell-off? Are we going to have a correction, a recession, depression? What exactly is going to happen? And although right now, for example, the market is up, the main question is, well, how high can it go up until we see, for example, a change in the cycle? And by the way, a part of the market being up is also artificial because of all the money that's being pumped into the economy. But overall, guys, in this video, I'll tell you exactly what to do in case the market does crash. More important, exactly what I'm currently doing in case it does crash, okay? If we have like a sell-off, a recession, or anything like that, okay? Now, if you guys are new here, I post videos every single day. So also subscribe, hit the bell to get notified, and top out also destroy the like button. And also comment down below and let me know any ideas on finance or money, whatever questions you actually have, so that we can make a video for tomorrow and whatever question you actually have. Now, the very first thing, guys, is 1970 and 1980. No, Tommy, it's 2021. I think you're confused here. No. I know what year we're on here, but the goal is 1970, 1980. What happened during that time was basically the great inflation period. We had a lot of inflation during the 1970s and the 1980s. And the idea is during this time, we had double-digit inflation. We had a loss of jobs. We had the stock market being down around 50%. And by the way, it sounds familiar to March of 2020. Remember that, except the inflation? And the answer is, that's what I'm mentioning here, okay? Because when that happens, it can potentially cause a lot of problems. Now, although right now, currently in 2021, unemployment is slowing down, the market is actually up by a lot, and on top of that, you're not seeing all those issues in the economy, with inflation especially. However, though, could what's going on right now potentially cause a sell-off? Although right now we are seeing the opposite. Well, the answer is, you gotta dive deep into why we're seeing what we're seeing right now. The answer is, again, the Fed pumped a bunch of money into the economy, and so did the government with the whole stimulus program. So artificially, we have a lot of money into the economy, when in reality, it should have slowed down dramatically during the entire pandemic. So a part of all the growth we have right now is artificial. And by the way, guys, if you guys don't know this, inflation is going to be one of the most important things. Why? Because it directly affects you. When you have inflation going up, that means basically prices are getting higher and higher and higher, meaning that your money, if you have a $100 bill, every single year, it is losing value, okay? And that is gonna be a massive issue because, again, it affects you directly. On top of that, right now, currently, although we are not seeing double-digit inflation, we are seeing prices actually increase from consumer goods to, for example, real estate, building prices, all that stuff also, and also the price of steel and everything else out there. So in a way, inflation is going up, although it is not at double digits. Now, I mentioned this in relation to the whole stock market sell-off because basically, if you guys know, the entire purpose of the entire Federal Reserve is to say, hey, we want to make sure we have stable employment, we want to control inflation, and we also want to have stable interest rates. Now, because everything was happening in 2020, the answer was they went ahead and lower rates, which basically means you borrow more money, a lot more cheaper, more money to the economy, business grows, stock market grows also, you stimulate the economy. That was the purpose of that. However, when inflation starts to get out of hand, because basically too much money is being flooded into the economy, what happens is, well, the Federal Reserve has to slow down and the entire stimulation policy or whatever it is, right? That means basically when that happens, when Fed rates go up, what does that mean? Well, now banks change their rates, which basically means it becomes more expensive to go out there and borrow money. Now, when that becomes more expensive, it means basically you and me, normal consumers out there, we're not going to borrow as much money to buy a house, potentially buy a car, use our credit cards more often, whatever it is, because again, it becomes more expensive to actually borrow money. But not just that. when you stop borrowing money in a way and the economy slows down, you're not actually buying things anymore, in reality, business also slows down. Now, what happens next is basically, guys, when business slows down, well, they don't spend that much money, for example, on marketing, making new products, all that stuff, because in reality, business is down. When business is down, profits is down. In reality, also, the stock market also tends to go down, because in reality, stocks are just businesses. Businesses are bad. Guess what? Stocks are also going to go down. Now, when that happens, what happens is potentially is sell-off, because when you investors see, hey, the market is down 5, 10, 20, 30, 40, 50%. It could happen, by the way. Well, now you have a massive sell-off. And at that point, potentially you could have a depression or potentially a recession. And when that happens, things get very, very tricky. And that's why it's so tricky stimulating the economy, but also pulling back once the economy is stimulated by the Federal Reserve. Because to control inflation, they have to pull back. When they pull back, potentially, people might say, hey, I'm not gonna borrow that much money, which might mean the economy slows down, which might mean market goes down a little bit, but could potentially trigger a sell-off. And by that point, you might have a massive issue. Now, by the way, I do want to mention one thing. Whenever, for example, you have the fear of, for example, a lot of inflation or a market crash, that does not mean you hoard your money. You don't do that. Why? Because basically, if you have a bunch of cash on hand, well, in reality, it doesn't help you in any way, because every single year, your money is basically losing value. So you don't actually want that. So the main thing is, usually, if you're scared of inflation, you want to have your money parked somewhere that's inflation protected. And by the way, you also have tips, treasury inflation protected bonds, which basically help you protect against inflation. But also, it's not just protecting against inflation, but it's also trying to beat inflation. So basically, the best place to have your money basically parked is going to be, for example, in the stock market in a way, and also into real estate, or for example, into a business that can make you more money than you would be basically costing you in inflation. And that's, in a way, exactly what the Federal Reserve wants. They want to stimulate the economy. They don't want to stop people actually from spending money and all that stuff, but they do want to stop inflation if it does start to actually happen. Now, although, again, it is not 1970 to 80s, okay? We're not seeing double-digit inflation numbers. Will we see that? Most likely we won't. But although it is not that right there, if we see inflation picking up, that is a sign of a potential market sell-off, because in reality, the whole process is going to be, hey, Fed has to pull back. Less money in the economy. Businesses basically not getting that many sales, which basically means stocks tend to go down a little bit. So keep in mind that when it actually takes place. Now, by the way, guys, okay, Tommy, but what am I supposed to do, for example, if we do have a correction, a sell-off, a recession, depression, what am I supposed to do? Usually you hear, hey, just buy the dip. Don't worry, okay? Invest into Bitcoin. Don't worry about anything, okay? Everything's gonna be fine. Or, for example, just short stocks or buy some puts and calls. Do all that stuff. However, in reality, the truth is that's probably a little bit too risky. In reality, when you buy the dip, you don't know where the end actually is. The dip to a stock is actually all the way to zero, potentially, if you don't know what you're actually doing. So the idea is, if you are a stock picker, and picking stocks based on financials, for example, the balance sheet, the cash flow statements, the income statements, all that stuff, you actually understand stock picking, the answer is, well, when the stock market crashes, it's just an opportunity for you to go out there and basically buy more at a discount. However, if you are investing, kind of like the way I do, for example, into index funds, mutual funds, basically for retirement, the answer is, well, you don't stop investing during a crash. Or when we don't have a crash. The answer is you continue investing overall. That way, you do something called dollar cost average. Basically, if I buy when the market is high, also when it's low, what do I get? I get the average. My grandpa, okay, he only bought when the market was high. When it crashed in March, he didn't, okay? The answer is he did not get a chance to actually buy at those low prices when it actually did happen. As far as, for example, when it comes to index fund and mutual fund investing, and potentially also ETFs. But that's the core idea. When it crashes, the answer is you gotta keep buying. But if you are a stock picker, you gotta buy a lot more and buy that dip. Basically buy your investment at a massive discount. Will this happen in 2021? Obviously, although you might see signs when it comes to a market crash, for example, the economy slows down, interest rates go up, okay? becomes more expensive to actually borrow money. All these things are a sign, but the answer is when you see all these things, you still cannot predict when the market is going to actually crash. So in my case, okay, whether they're raising rates, whether the public feels bad about stocks, and by the way, right now, the public feels excellent about stocks, everyone's investing, but the answer when it crashes, it will be a different story. However, my plan right now, what I currently do is, hey, well, I'm still investing the same amount of money every single week, whether it's raining or whether it's sunny, whether we're up or whether we're down. Again, the goal is you want to get the average by doing dollar cost average. Basically means you want to invest the same amount of money at the same time frequency over a long period of time. That way you get the average return. But whenever you see inflation or the economy slowly recovering or us actually opening back up, when the Fed pullbacks that can potentially trigger is sell-off. And just be ready, okay? It's just a part of the game. When it happens, if you're a good investor, you buy more. If you're doing index fund investing, you basically keep buying. That's the whole idea, but you don't stop. And by the way, one thing I also have is, for example, also an emergency account. Because by the way, when times get bad, you don't know for how long. You know, I think the Great Depression, that's for around like 20, 25 years. So it can go for a very, very long time. So you don't want to basically say, hey, it's going to be down for like 3 months or whatever. No, it can go down for a very, very, very long time. 1970s, 1929, 1970, people were still very like hesitant about the whole stock market, right? So it can go down for a very long time. So the answer is you also want to have an emergency fund. That way, when times get really bad, you still have money to take care of yourself and your family in case things get very bad. So for me personally, I have 6 months worth of expenses. So if anything happens, I have 6 months to figure out exactly what my next move is actually going to be. But whenever I buy a stock or basically invest into index fund, I'm buying not for today, but I'm buying for 10, 20, 30 years down into the future. So potentially 2021, will we see a sell-off? Will we see a market crash? The answer is we don't know. But what we do know is that there are things you can basically do to make sure you are, for example, in a good position. On top of that, also, when you do see inflation, the answer is don't hoard your money. You want to invest it in order to basically have your money make more money than inflation is going to be costing you. If you just want to park some money, put it into tips, treasury protected, well, treasury inflation protected bonds, okay? That's the whole idea there. And guys, that's it for this video. Comment down below. Let me know if it was helpful. And by the way, I don't like causing stress. I'm all about relieving stress. So the answer is, if you are stressed about a potential market crash, the answer is don't be worried that much. It's a part of the game. Just make sure you're not putting all your eggs in one basket, because then you gotta be worried, okay? I'll see you guys tomorrow. Thanks for watching. As always, like, subscribe, hit the bell so you're notified. And on top of that, also, if you want to call me and talk to me one-on-one, well, join me on my third channel, TommyBryson, link down below. And by the way, all calls are free, 30 minutes, talk to me about whatever you want. I'll see you guys then. On top of that, also follow me on Instagram, TommyBryson. And before I go, thanks for watching. And again, if you want to watch a full video on investing and how it works, here's a video right here. Click my face right here. See you guys tomorrow. And as always, peace.